Good afternoon, traders and investors. Will back here with another one, coming to you with a Friday market recap. Hope all of you had a very good day of trading and a very good week of trading as well. And in today's markets, guys, well, it was the culmination of a week of sell-off, and fitting that the Friday is the worst day of the entire week. The S&P putting in a 5-day losing streak at this point in time, something that has not happened since April, and for the QQQs, something that has not happened since the month of January. And we've been kind of warning about this ever since last week when we had the euphoria rally after the election. I was kind of warning you guys about the possibility of a pullback after such a big euphoric run. So in today's video, guys, we're going to do a few things together. Number one, we're going to shed some light into exactly what happened in the markets today to have such a big sell-off to the downside and not much rotation to be found as well. Thereafter, we're going to take a look at our technical analysis portion in terms of our major stock market indexes, see how everything is shaping up after this week's worth of red, and thereafter take a look at some of our big tech names too, and see after this week's worth of red, is there possibly some opportunities to be had in some of my favorite big tech companies? And lastly, of course, do a little recap of the portfolio of the trades made this week, and of course of the trades and positions that I have running into next week as well. Quick little glance, it was a very decent week for us trading the wheel strategy. We did get assigned a few positions, but I'm fairly happy with the positions that I got assigned and the levels at which I got assigned to. So fairly good week of trading, guys, all in all, in terms of realized profits. So that's pretty much it for the intro. Let's jump right into the content. So in terms of the SPY, guys, down a big, brutal 1.3% to the downside, QQQ down 2.4%, and put your sunglasses on, guys, because the heat map's about to get very bright. Big red, guys, in big tech, all except for Tesla and Palantir, the two most green points in the technology sector as a whole, but really everything to the downside, guys. And there's a few reasons behind this, which we're going to get into in just a few minutes. There was some rotation to be had in the markets, mostly in terms of financials. Healthcare really taking a bath after the Robert F. Kennedy Jr. news, being appointed as the new health secretary under the Trump administration. We'll get into that in a little bit too. Utilities, the bright spot in the market, but that's pretty much where it ends, right? Defensives, for the most part, down. Pepsi down 4%, and industrials and real estate not doing too hot as well. So you can see fairly bad day for the markets overall, but was led to the downside by the heaviest weighted sectors. Technology, semiconductors, once again, guys, not cooperating with the market, and they have not been cooperating for a very long time at this point. In terms of the one-day relative, you can see that even better. Utilities, financials, and real estate, the only green sectors, everything else to the downside, led majorly by healthcare and technology. On the one-week relative, well, this just goes to show, guys, the last 5 days have been red after last week's euphoric rally after the election. Everything pretty much, except for financials and energy, now in the red. On the 1 month relative, you can see now, guys, very mixed market. Although we are close to the all-time highs, all sectors are not performing the same. Extremely mixed market. The upside, consumer cyclicals, communication services, that's largely Google and Meta. Financials to the upside, and to the downside, basic materials and healthcare. You can see right in the middle, the big one here, technology virtually flat. Big tech has been pulling to the upside mostly, but semiconductors has been weighing that index down. So before we get into more technical analysis, guys, let's go over a few of the reasons as to what the media was saying the reasons for the decline was today. Well, there's three of them, right? Number one was the hawkish statements from Jerome Powell yesterday, saying that they were not in a hurry to cut interest rates, referencing rather the December meeting coming up. If you take a look at the rate cut odds, they now stand at 60%. This was as high as 80% after the Wednesday CPI number, and they've been oscillating back and forth in the last 2 days. You can see now it's 60. Yesterday was 72.2, but today we did get some fairly decent retail sales data, right? 0.4% versus the 0.3% expected. So this just goes to show, guys, that the consumers are still healthy, are still spending, and it's kind of in line with the hotter than expected CPI that we got month over month just a few short days ago, right? So those kind of go hand in hand, no surprise there, but it was not enough to keep the markets to the upside. They're really focusing on a hawkish Powell. And I'll tell you guys why that does not matter. These comments are being interpreted as hawkish, but they may not be. Jerome Powell, although he said not in a hurry as his key words, I mean, they can still cut interest rates in the December meeting. Jerome Powell has been very straightforward with everybody, saying that they will be data dependent and they have well enough room to adjust depending on the data incoming. Now, as we know, inflation has been trending to the downside. The economy is still overall healthy, and the jobs market, although weakening ever so slightly, is not yet falling off a cliff. So the recession indicators are not not flashing any major red flags right now. You can make an argument, and I do still believe in a portion of the bear market thesis, right, in terms of the possibility of going into a recession, but we may not get that data much until Q1 of next year. So for now, I still do maintain that we are still in a relatively healthy market. So that's aspect number one, and why we had such a big drop on big tech today. But it's very, very funny. They said that big tech is responding to possibly higher interest rates for longer. Now that's very funny, guys, because if you've been with me for a while, you might remember this SPY rally from November through April, which was very tech heavy, only big tech and semiconductors, and the entire rest of the market was getting left behind, which led to beliefs that the market was not broad enough and it was not sustainable. You guys remember that period, this 6-month period where it was only big tech and only semiconductors going up while interest rates were at the roof, no interest rate cuts yet? Well, analysts back then were justifying that by saying, well, big tech is the safe haven trade. They have tons of cash. They won't be affected that much by interest rates. And now that Jerome Powell turns slightly hawkish, right? They sell off big tech in a very big way and say, well, it's because interest rates are going to be higher for longer. Very, very, very funny how they play on these narratives, right? If you ask me my opinion, guys, today was all about bull trap on the euphoria and consolidation, right? You can see that best when you take a look at the max pain numbers for the options expiry today, because options were a big expiry today. Look at the QQQ max pain level. We came right down at it. It was at 500 and we closed very close to 500. Essentially what this means is everybody who's too far away from the strikes all expire worthless. We know that last week was a record week in terms of both call buying and put buying after the massive volume came in after the election. And this was the week for the market makers to really go into town, trap everybody and take all of their money. And that's exactly what they did on the Qs. And they did the same thing on the SPY, guys. Trap everybody and take their money. We really came very close to expiring, close to max pain. So this means that the market makers made all the money and most of your call and put holders all expired worthless. So just running away with everybody's short-term options plays. If you ask me, guys, today was more a catalyst from the market makers using certain pieces of data to really accelerate the moves to the downside. I mean, you take a look at this and it's clear as day, right? This is pretty much algorithmic selling all day on the SPY. Algorithmic selling below the 12 EMA all day on the QQQs as well. So they really milked it for all it was worth. So that's point number one and my thoughts on that process. Number two, of course, driving the healthcare sector down. The healthcare sector, guys, actually ending its worst week, 5.55%. You would have to go back all the way to COVID to find a week where we had a 5.5% drop. There's actually one more, which is October of 2020. Other than that, all throughout this time period, you will not find a week where we ended a week 5.5% to the downside on healthcare. And largely that is due to Trump's appointment of RFK as his new health secretary for his administration. Now, I do think that this is a very positive aspect for the US consumer as a whole. I really like RFK's policies and how he's trying to attack big pharma and a lot of the food companies for putting in processed ingredients that are leading to a little bit of a health crisis for the US consumer. Myself being in Canada and a lot of you folks maybe being in Europe as well, you know that we have far more regulations on our food quality than the US economy does itself. So he is attacking those industries both on the for health concerns, both for food, but also the pharmaceutical companies, guys, for both price gouging consumers in terms of the cost of pharmaceutical drugs, but also in terms of vaccines as well. We know he's a big proponent of being anti-vaccine. So obviously today, guys, the healthcare sector as a whole just fell off an absolute cliff after that nomination was made yesterday. And lastly, the profit taking and the bull trap. As I was saying, I warned everybody about this last week coming up into the trend line. Very overbought conditions, guys, on the short-term timeframes, on the hourly and on the 4-hour time frame, both on the SPY and the QQQs as well. And you can see, guys, we went straight from hourly overbought straight into hourly oversold. The bull trap, the profit taking, and now run in the other direction. So I was telling everybody to be very cautious up here, and hopefully you guys we did not take that big of a hit if you were also cautious and waiting for a pullback. Never a good proposition, guys, to YOLO at the all-time highs after we had a hype and momentum catalyst, guys. Usually you want to wait for markets to settle, the volatility to settle, and just should be prepared to go shopping for your favorite companies on the event that they do pull back, right? So many stocks in the past week have gone up 20, 30, 40, 50% off of pure hype and momentum alone. And that's when myself, I pump the brakes, I relax, and I say, you know what? I'll let everybody have their fun. And then when they get the bull trap, as always happens more often than not, I will be looking to shop and buy the dips. So hopefully that provides some insight as to what happened today and my interpretation of that. Nothing more, guys. If you ask me, no fundamentals have changed at all. If you take a look at the big tech names, all of these big tech names, right? Have any of the fundamentals changed overnight? Is there anything that changed with Amazon for them to be down 4.2% other than the fact that they had a cybersecurity incident today? No. Is there anything that fundamentally changed with Meta's business for them to be down 4% today? No. Is there anything that changed with all of the semiconductor industry? No. Applied Materials actually had some very good earnings and they sold off the entire industry today, saying that Applied Materials gave terrible guidance. They really didn't give terrible guidance at all. Their guidance came in line, right? So once again, using every single catalyst possible that they can to drive markets to the downside, shake people out in the process. Did anything change with Microsoft's business overnight for them to be down 3%? Absolutely not, guys, right? So a bit of a shakeout in the markets right now. So hopefully you guys are able to approach these markets with a level head and go shopping for your favorite companies when they hit your desired level. So let's get into some technical analysis after that speech. I'll delete this right here and taking a look at the SPY. So we were anticipating this all week pretty much, guys. Watch the hourly oversold timeframes. Usually when you come out from an all-time high into first hourly oversold conditions, usually you do get a decent little bounce. However, will the bounce only be for a lower high for the bears and then lower low flush on the daily downtrend, resulting in more weekly consolidation? Well, that we don't know. We will keep a very close eye at it next week in the Monday and Tuesday session, but I am anticipating, at least because we have some short-term oversold. You don't see it on the SPY over here, but if you take a look at the futures, right? 4-hour oversold on the futures, it encompasses overnight. 1 hour got blitzed during the session today, and daily oversold on the futures is nowhere being close, but you don't really expect it to be close, guys, unless you go into a panic sell-off like the Black Monday event, right? Usually SPY doesn't get that daily oversold unless you have, 2 weeks in a row of downside selling. So we're not there yet. I am anticipating a little bit of a bounce, and we do have support down here as well, battling with the moving averages, battling with prior resistance, which is now current previous support. So not looking too bad. Still have a remainder of the gap to be filled, the election gap, which does line up with the 50 EMA. So I'll be watching closely how the price action evolves over the Monday session. But as of right now, guys, the bulls still control all the time frames, still in control of the monthly, still in control of the weekly, still in control of the daily. November and December seasonality is also supposed to be good, and it will be a little bit of a bumpy road until the end of the year. As a matter of fact, most analyst price targets and most institutional price targets are still above 6,000 for the SPY. So a little bit of a bumpy road, a little bit of profit taking. Not going to look too much further into it, guys. I don't have a crystal ball to be saying, can we do the all-time flush? We don't really have the data for the all-time flush just yet, right? And can we go for the absolute moonshot? Well, we also don't really have that data as well. If anything, it may just be a grind worth of momentum higher as we ride these trend lines, right? So that's pretty much the analysis for the SPY. Looking at the QQQs, same analysis as well, right? Big daily drop right now, but keep an eye on your short-term timeframes. Hourly oversold on the Qs, 4 hour, not quite oversold, but they are deep oversold on the futures charts right now. So we could be expecting a little bit of a short form bounce into Monday and Tuesday. We did leave a big gap ahead of us from yesterday into today, or, yesterday into today's price action. So we will see a little bit of a gap to be filled still about 492, which is the election day candle to the upside, right? And we are reacting from the overall area of support, which is your prior all-time highs, prior resistance here as well, a little bit of a back test and possibly for a little bit of a bounce. We'll watch the size of the bounce, guys. Need to watch for the hourly trend change, then watch for the size of the bounce on the daily to give ourselves an idea. Can the bulls V-shape this, or will they have to do maybe a two-step process with a good bounce? But in the event, the hourly time frame just does something like this and then rolls over and gives us a very weak daily bounce, then we will know that the bears are likely to retest today's lows or dip a little bit further and start challenging some of these weekly support levels below us around the 480 mark. So as of right now, not panicking whatsoever. We are still respecting our longer term moving averages. The bulls still are in control, and we don't have any really crazy negative data that we've received over the past 2 weeks. So in my humble opinion, still somewhat normal price action right now, but always be mindful to exert a little bit of caution, especially at the all-time highs right now. You guys can see how quickly they can bring in the volatility. So be a bit cautious, be a little bit reserved with your trades. Moving into healthcare right now. So healthcare as well had a very decent week on healthcare. Didn't really move too much. Did a great job of trying to hold up the SPY as best as they could, but they can't do it forever, right? In the event healthcare drops, keep a special close eye on 48.76. Flush that to the downside, you've lost the daily uptrend, and you're going into weekly consolidation. Who's in control here? The weekly bulls obviously in full control right now. Any extended daily drawdowns will just be translating into a weekly attempt at a higher low, looking at maybe the 47.70 area as your likely area of support. So we'll keep a close eye on financials and how they react. But for the most part, financials were very good today. Anything from Berkshire to the banks to credit card companies, largely unfazed by today's brutal sell-off in technology. And moving into healthcare now. So healthcare, daily oversold conditions, guys. 25 RSI. The last time that this happened was last October. Yes, more than a year ago. And as you can see, healthcare, usually when we crack the 25 RSI levels, it doesn't stay there for too long. January of 2022 resulted in a bounce. October of 2021, right here, resulted in a little bit of a bounce. So we are expecting a bounce quite shortly, in my opinion. The 4-hour also oversold. RSI is 20. When's the last time we had a 20 RSI read on healthcare? It had to be October of 2023. Once again, you got the bounce. And once again, same time period, June of 2022, and you did get the V-shaped bounce as well. So taking a look right now, hourly deeply crushed at 15, guys. So I'm not saying that this is going to be the actual bottom, but we're coming into a very, very large area, right? The reason I highlighted this whole area was just because in the event that, you know, obviously it's a daily downtrend, right? So in the event the daily downtrend continues, the weekly downtrend continues as well, and we come into a little bit of monthly support. This is your higher low right there, 137.85. But even if we breach below and lose the monthly, guys, it's done it in the past, right? Where we've been in a monthly uptrend, we breach the lows, come down, and just get some sideways action. So I'm not expecting the all-time flush on healthcare and just healthcare just unraveling and come massively down, right? If anything, we may just get trapped in somewhat of a tightening range, extended range, as we kind of iron out the shifts in the administration from the Biden administration towards the Trump administration and get more context and more clarity as to how these issues between pharmaceutical companies, the FDA, and other things are going to be regulated by the Trump administration. So for healthcare right now, I am kind of staying away from this trade, just being a little bit more cautious because we don't have that much clarity, right? Taking a look at AbbVie though, AbbVie is entering one of my desired locations, one of my favorite healthcare stocks, but I am approaching this one with a little bit of caution. There could be a swing trade here, but we need to see momentum kind of taper off, right? We need to see the bulls start to make an attempt at a daily trend change in this lower region, and only then will I make an attempt for possibly a weekly bounce. Moving into SMH right now. So SMH, obviously one of the sectors that's been struggling. If you've been in SMH, guys, since July, you haven't made any money. Since the month of June, you haven't made any money, and drop it a little bit lower into here, and all the way since March, you probably wouldn't have made any money unless you're in a few key companies. Number one is TSM. They've pushed the highs. Number two is NVIDIA. They have also pushed the highs. And number three, of course, has to be AVGO, who have also relatively pushed the highs. But other than that, guys, the entire sector has been struggling. And I'll pull this one up as many times as I can, but I want you guys to focus on why this is the case. This is not new news. These companies have all been guiding that the end of 2024, they would still have a little bit of cyclicality. What is cyclicality, guys? We'll explain to you when we take a look at some of these companies, right? A lot of these companies, as you've noticed, I put this on the 1 month relative, right? 1 month relative, NVIDIA still green, Intel still green, but take a look at this list right here, right there, right? Everything is green. Everything is red except for a few key names. TSM is not in there, but they are green. So why is this the case, guys? Well, because a lot of these companies have cyclical nature. I'll explain again. We're not going to spend too much time on this, but I've been talking about this. We've covered a number of different companies' earnings this cycle. I want you to notice one simple fact, right? For a lot of these companies, Applied Materials, you see it a bit less. But 2022 and 2023, let me pull up ONs, just so you guys know what I mean. A lot of these companies, what do semiconductors do, guys? Well, they power electronics, right? Phones, tablets, PCs. They also power, well, data centers, of course, is another one, but they also do cars. And a lot of those segments, other than data centers, consumer electronics have been weak. Even NVIDIA's graphics card segment, the retail segment, has been weak. AMD's been weak as well. Intel's graphics area for consumers has been weak as well. We know that auto sales have been trending down as well. And we know that PC and electronic sales have been lower as well. Microsoft has said this as well. Why? Because of the cyclical nature of those products. They ebb and flow with the economy. When money is cheap and there's high demand for them, you get a boost in EPS like we saw in 2021 and 2022 with low interest rates and a lot of stimulus checks. And now comes the cyclical nature of the business. A lot of built up inventory coming into the lows of 2024, which all of these companies said would be a transition year before they expect growth to resume 25, 26, 27. This is ON Semiconductor. Look at LRCX. Right? Look at LRCX. Let's take a look at LRCX. The exact same thing. Boom, bust cycle, and now boom back in 25. Look at ASML, right? Same concept. Nice little ramp here into 2023, 2024 transition year, and then they're coming back to the upside. Look at MCHP, another one of these companies, right? Boom cycle, down, and then up. Look at a company like Micron as well. Micron too, right? Boom cycle right here, increasing EPS, built up in inventory, low demand, transition phase, and then boom once again. You see it in the revenues as well. If you put it on an annualized basis, right? You see it in the revenues too. So it's no surprise, guys. All these companies have told you what's going to happen. So it's no surprise that it's actually happening right now. That being said, now is probably the time that if we want to position for that ramp up, 25, 26, 27, while the sector is out of favor, right? It was one of the lead bulls back here, and now they're kind of one of the lead bears with healthcare. And I keep saying this, guys, you cannot expect the SPY and the QQQ to really get the lift that they want to have without two of the major sectors, without healthcare and without semiconductors, right? Look at the 1 month performance. Everything except for NVIDIA is red here. On healthcare, I'll move myself over. Everything here is mostly red. These are two massive components of the S&P 500, so you cannot expect the S&P to have really good lift and really good continuation on its rallies without these two major sectors. That being said, price action, 238 down to 229 is the last line of defense. 200 daily moving average is down there too. So I like this area to start bidding semiconductors. And the way I'm doing it, guys, is playing short puts on my favorite companies that have been low, companies that are beaten down. I love writing short puts under the market to benefit from some of this weakened sector and some of the heightened volatility that's in the sector right now. Do not forget, we have NVIDIA earnings next Wednesday. They could either breathe some life into the sector or give the sector one last flush to the downside before we could see some juicy positioning, both retail and institutional, for some possible longs. So still, the daily, bit of a downtrend right now, loss of the daily uptrend momentum right now. They failed the attempt, and now we are right back down to the lows. So the weekly time frame is still somewhat of a tightening range, right? So as of right now, no clear direction, and semiconductors, I still resort to short puts for playing this one as best as I can. Moving into the IWM Russell. So the Russell, once again, trap up here, profit taking and the bull trap. Everybody who positioned up here is now hemorrhaging money. But I was saying this, guys, when you get a massive daily rally into daily overbought conditions, into 1 hour overbought conditions as well, extended overbought, watch for the loss of the hourly time frame because you will know that daily consolidation is coming and coming in heavy. So as of right now, the IWM still consolidating anything above 218, looking for the daily higher low for possible further trend continuation. Where are we bouncing out of right now? A very key section, 2020 and 2021 all-time high resistance range. We cracked through it, and now the bulls are looking to shape up for a weekly higher low for possible further trend continuation. They came in very, very hot into the lows. So I do still like this one for a possible breakout, retest, and continuation trade. But trust me when I say, guys, if the SPY and QQQ continue consolidating, the Russell will probably continue consolidating as well. And it would be very unfortunate if they were to give back the entire rally, but I still somewhat remain bullish on this one into November, December, and possibly even January as well. I don't believe that the rally is ending just yet, and I'll explain why when we tackle crypto. There is still a risk on movement right now. If you take a look at some of the options list right here, you'll see that other than Palantir, there was some green, right? Coinbase, Affirm, Disney is not in there, of course. But, you know, other companies as well. Some companies did do fairly okay today. The Russell, is, of course, was being upheld by the financial sector. KRE has about 17% weight, and those were not down too bad today. So the IWM was able to hold up gains better than, you know, other sectors such as the QQQ. So I'm still fairly bullish on the capacity of the bulls to kind of reclaim reclaim the daily uptrend right here because we have not lost it as a whole. There's still a lot of space to be had. I almost fell off my chair right there, so feel free to laugh if you want. Moving on to Dow Jones. Dow Jones down about 0.7%. The Dow Jones as well, right? Blow off top right here into overbought conditions, a little bit of profit taking and consolidation. So keep an eye on this level right here, 43,000 to 42.5. Probably the retest zone that we're looking at. The 12, the 26 are also in that location as well. And who controls the higher time frames, guys? Well, you need to look no further than the weekly to understand the bulls are in full control, looking for the weekly higher lows for possible further trend continuation. So pay special attention in the event we come back down here, how the bulls are able to react from that location. Now let's cover a few of our other sectors that we do only about once or twice a week. XLP, consumer defensives, not the best, right? Still, we know they're in a weekly downtrend after leading the market rally when there was the whole rotation from tech to value in late July. Now we've been consolidating as there has been a rotation somewhat back to tech. Obviously, this week, a lot of that came undone. But defensives as a whole, not looking too bad. Keep an eye right here, 79 down to 77 for a position. It is a monthly breakout retest of the prior all-time highs. So not looking too bad, guys. Favorite companies in there, of course, has to be Costco. Costco and Coca-Cola presenting a very juicy opportunity, in my opinion. Daily oversold, 2 last weeks of daily oversold on Coca-Cola. This does not happen often at all, guys. They're giving a very decent opportunity for entry right there. Warren Buffett added to his Coca-Cola position over the course of the last quarter. Just sucks that we gave back all of this move, right? But it is still a monthly uptrend, looking for a monthly higher low. So daily should be getting somewhat of a bounce yet for Coca-Cola. So that is one that I like in consumer defensives as well. Utility sector, fairly muted. They've been battling with the increase in the long-term yields, as well. But as of right now, take a look at the longer term timeframes, just looking for a monthly higher low for possible further trend continuation, reacting very nicely from our prior areas of all-time highs. So utilities could be a very favorable trade once the yields start tapering off. I think this one is really going to get some lift. Same thing for the next sector right here, which is real estate. We know that real estate has been struggling in the last 5, 6, 7, 8 weeks since the Federal Reserve cut interest rates for the first time. And this has translated, unfortunately, to a rise in the 10 and 20-year yields, which is not good for real estate. Still looking for the monthly higher low for possible further trend continuation. I like it if it comes back down into the 41 location. Could be a great short-term position. If you believe that longer-term yields are coming down in the next year, could be an interesting trade. And once again, my favorite level in there, or my favorite stock in this area as a whole, is Vici. Vici coming down, reacting nicely from the 31s. So this could be an attractive position if you're looking for a real estate name to hold over the next roughly, 3-6 months type of trade, right? Moving into our yields. So yields, oddly enough, here's one of the things that we have to notice as well, guys. SPY QQQ down. If you want to know whether or not the indexes are getting crushed because there's fears of a recession, well, look no further than the 10 and 20-year yields, right? We know that these bonds respond, the inverse of the bonds, they respond to catalysts in the market. When there are fears of a recession, look what the 10 and 20-year yields do, because this signals that the Fed is going to have to cut rates a lot faster than anticipated to stimulate the economy. So when there's actual fears of a recession, well, the yields come down. When there is no fear of a recession, right, the yields tend to go up. Obviously, this is a very basic interpretation. There's a lot more that goes into it, but how I'm speaking about it now is how it ties into the index moves. Is this move down because there's fear in the market of a recession? Well, no. If it actually was, you would see TLT absolutely spiking today as traders and institutions look to protect themselves in longer term yields. The longer term yields are attractive right now, right? Institutions, what's the opportunity cost, right? So the opportunity cost right now, the risk-free yield on the 20-year is 4.72%. On the 10-year, it's 4.41. So it stands to argue if institutions and retail was nervous about the possibility of a recession and equities really falling off a cliff, well, people would be flocking and trying to lock in these long-term rates and just avoiding the equities market as a whole. What you see today has not been that pivot. Obviously, one day is not enough to derive a trend, but the one thing, if you notice, guys, a big short-term decline in yields, that means that the markets are starting to get a little bit nervous about a recession narrative and people are flocking to safety. As of right now, that's not the case. You can see that in gold as well. Nobody is flocking to the safety trade as of today. Gold was actually down on the day. So this one's still trying to kind of do the monthly higher low establishment, right? Been a glorious monthly uptrending rally right now, looking for a monthly higher low, very extended on the monthly. And usually when gold hits these 80 RSIs on the monthly, it's not NVIDIA, guys. Usually it does have a monthly pullback, right? So just looking for the monthly pullback as well. Big weekly pullback too. And we're coming right into my area that I derived which is about 2,500 all the way down to roughly 2,400. Could be a decent little retest zone for the longer term bulls, especially if you look at it on a monthly time frame. The monthly 12 EMA is right down there, and gold does come back down and tags the 12 EMA quite often, especially after these monster rallies, right? It can do it. So as of right now, no flocking to the safety trade as a whole. And take a look, the other safety trade too, right? USD JPY, that is one that came alive in the end of the day. It looks better when you look at JPY USD. So usually when there's fears of a possible recession, you get a very rapid increase in the Japanese yen. So far, you know, one day is not enough to derive a trend, but we will see. If you constantly see more and more pressure build up in the Japanese yen trade, people flocking to the US, to the Japanese yen and fleeing the US essentially, right? Look for the safety trade, TLT, Japanese yen, and gold for your recession indicators. As of right now, no brutal position or no brutal rotation away from equities into those markets just yet. Now let's move into Bitcoin. So Bitcoin going on an absolute rally today, guys, 0.25%. Well, this is the new daily candle. Yesterday, it just closed about an hour ago. Yesterday's candle, guys, 4.26%, right? So completely going opposite of equities. There was a lot of consolidation and profit taking in equities, not so much in crypto. So Bitcoin's still looking very strong, refusing to give up the daily support levels, but now the daily higher lows are definitely here. 85,000 roughly, 85,000, get a flush of 85 without new all-time highs. You will get the daily downtrend and you will get weekly consolidation. As of now, we will see how this weekly candle closes. I will remind you, it does close on the Sunday session. So we'll see, are the bulls able to continue the rally? Usually Saturday and Sunday are known to be bullish for crypto. So let's see, can they put in more gains? We will definitely keep a very close eye on that, guys. But one part of the risk on trade, this is what I was hinting at with the Russell, there are certain aspects of the risk on trade that do show that people are still willing to bet and bet heavily on this aspect of the market. So we'll keep a close eye on that. As of now, Bitcoin bulls are in full control. Just keep a close eye on the 4 hour, guys. 4 hours is going to be clutch, right? Lose 87 right here with a 4 hour downtrend. You may be shaping up to go for the daily higher lows, which are down here at 85. So pay special attention to this over the next few days of trade. I would not be surprised that consolidation is coming eventually. It's just that when it comes, we'll have to watch the size of the consolidation, right? Shallow retracement before a new high, very, very healthy. Big retracement, well, then you end up kind of sacrificing the idea of a possible V-shape, and you may just end up with some sideways consolidation as we iron out the kinks in the overall market. Bitcoin dominance still extremely high, so we won't go through the rest. Just understand that when Bitcoin is green, everything else in the market is going to be green as well. Take a look, Bitcoin dominance still very, very high. This is just representing, what does Bitcoin dominance mean? It just means out of the total market cap of crypto, how much percentage of that is Bitcoin? And as you can see right now, it's about 61% of total crypto market is in Bitcoin. And if you want to see the ETH rally, altcoins really taking up Bitcoin, you need to start seeing, guys, need to at least start seeing a daily uptrend on ETH Bitcoin and also a weekly uptrend formation on ETH BTC as well. Then and only then will you know that the altcoin rally is upon us. And usually that only happens when Bitcoin is done, the exponential move to the upside, starts consolidation. Then you might get 2 weeks worth of altcoin run rallies. So the rotation in crypto will be closely monitored by myself as well. Moving into Apple right now, let's take a look at big tech, how they fare off after today. Well, Apple's still doing a whole lot of nothing, right? Still trapped between two zones, 230 to 225 overhead resistance, and below us 219 down to 215. So on the daily, no clear daily breakout. Need a breakout of 228 to get the daily uptrend in motion, and then need to clear the 236 for a confirmed new leg of a weekly uptrend. As of now, we are still trapped within this big range of accumulation, guys. To the lower end, I wouldn't be opposed to playing some short puts on Apple, but I like to get as close as possible to 210 or under. So what I'm saying is if we see more consolidation in big tech next week and Apple comes down 219, 215, could be a decent opportunity to shop for some short puts if volatility increases below 210, around 206 is where I would love to find Apple. As of right now, I'm still holding my shares, not buying any more Apple shares up here, not swing trading the company either. I think there's better trades in the market to be had if you're looking for pure upside, because Apple's valuation right now is a little bit high, and other than just going up with the broader market, I don't really see a very bullish catalyst for Apple to really give them another 20-30% rally beyond the all-time highs. So Apple, I'm fairly defensively positioned in Apple right now. As I said, I'm not selling any of my long-term shares, but I'm also not buying more, and swing trades, I'm being very patient. I want my short puts down here. Moving into AMD. AMD down about 2.84%. Not, not the worst day for AMD, considering they were down less than NVIDIA and less than a lot of other semiconductor names. But we know AMD's been notoriously weak, at least since their earnings, right? They did have good earnings. I like their earnings, but the market just didn't care, right? Daily downtrend in motion, clear as day. And now we have all but sacrificed the entire weekly move to the upside as well. So weekly uptrend, unfortunately, now is almost lost. They've lost the entire momentum. So I think if AMD can maintain the range here, 134 to 126, last line of defense, if they can maintain this, they may just get stuck, guys, between the whole 154 down to about this range right here. And why that matters, guys, is because they lost all the major time frames, right? The daily's lost, the weekly is arguably lost as well. So it's going to be a long road to recovery for AMD, at least. First things first, they need to reset the daily uptrend. Only then can we look at the size of the weekly bounce as well before encountering resistance. So there's a lot of things that the AMD bulls have to get together. If I'm looking to play this company, guys, as I said, I'm looking to play short puts under the market, benefiting from the volatility. At this point, we'd have to go for maybe the mid 120s, 125 down to about 115. Decent little location to be writing some short puts at. And unfortunately, guys, the monthly, guys, is still unfortunately in somewhat of a monthly downtrend. We still have not been able to turn that around just yet. So AMD remains a stock that, if you're bullish on it, I mean, I'm bullish on it as well. They will have some great data center expansion into 2025, but we have to be very, very patient. If anything, it's a good location to be playing some volatility on the stock with some credit strategies. But if you're looking for some long calls, some call debit spreads, and some shares, stuff like that, I'm not opposed to it here, but you may have to be very patient for this one to actually start breaching the levels that everybody wants them to breach. Moving on to Amazon, not my favorite semiconductor right now. I'm staying for semiconductors right now, it's very simple. I'm staying with the best stocks in that niche right now. TSM, NVIDIA, and AVGO. I'm concentrating my plays onto those ones because those are the ones that have favorable characteristics to them and the ones that demand is not currently a problem. They said demand is strong through 2025, so I'm sticking with the market leaders, or I'm just playing the index as a whole via SOXL, which is a 3-time leverage ETF. It's down near the 3-month lows at this point in time. Not a bad place to position, but this one as well, you got to be very careful. You got to be patient with it, right? When it's out of favor, it can be a little bit painful to hold, so just keep that in mind with your sizing, right? Sizing is very important on this one. Don't go all in, guys, right? Moving into Amazon. Amazon down 4.2%. Why? Well, for no clear reason at all. I mean, Jeff Bezos has been selling for the last 2 weeks. That's normal. He said that. He gave guidance for this in February, guys, that he'd sell between $5 and $8 billion worth of stock. So it should come to no surprise that he's been selling as well. And also, guys, I don't know where the headline is right now, but they had a little bit of a cybersecurity incident. I can't really find it because that's how meaningless it was, in my opinion. But as I was saying early on in the video, guys, they're using everything possible to drop these stocks, trap the equity up here, and just send them into daily consolidation. So unfortunately, Amazon losing the daily uptrend by flushing the higher lows down there. So daily consolidation is underway. We will take a close eye whether or not we bounce from here, guys. 200 down to about 198, the 26 EMA. It's not that big of a level. It's only all-time highs, right? The bigger levels of support come all the way down there. I'm not saying we're going to retest that, but daily uptrend is lost. We'll keep an eye whether or not we set up for the lower high into lower low. If that's the case, or if we just keep flushing, well, that'll be pronounced daily flush. And we may just be looking for lower high into lower low. I mean, the bulls can always salvage if we get a great recovery, right? But as of right now, the worst, I always say the same thing. Hope for the best, but expect the worst, right? If we get the daily downtrend flush, understand who's in control right here. It's your long-term bulls. The weekly paints a much clearer picture, in my opinion, going for the weekly higher low for possible further trend continuation. So if we blast through this 200, the lowest location that we can maybe possibly fall back into is maybe the low 190s, retesting the support before finding some support and reestablishing a new run. Give me a second. That's what happens when you talk too much and too fast, guys. My apologies for that. So Amazon not looking too bad. I will be bidding more of this stock with some short puts in this area and even possibly adding a few longer duration leap plays or call debit spreads to this trade. Moving into Google right now. So Google down about 1.95%. Also, guys, giving back a lot of last week's rally, but that's completely normal. All the entire market did at first at a certain extent, right? Daily uptrend was clear as day, looking for the daily higher lows, anything pretty much above 170, looking for the daily higher low for possible further trend continuation. Now, Google is coming back into this area that they cleared as support all right, as resistance rather. Now they're using it as support. They still have the weekly momentum at their backs right now, looking for a weekly higher low for possible further trend continuation. Anything above 161, very healthy pullback for Google in my opinion. Could be a decent buying opportunity, and I will be looking to play some Google aggressively. 170 down about the mid 160 range is where I want to accumulate a little bit more Google shares, because my price target for the end of 2025 on Google, guys, is at least 220. I would not be surprised if we clip 210, 220 over the course of maybe into the end of the year if we get a crazy rally, or at least the first half of 2025. I think Google should fare pretty well, even despite all the lawsuit headlines that they've been getting, right? But short term could be a little bit challenging because we did give back a lot of the move, right? This is a 78.2% retracement. So it stands to argue that the best possible chance the bulls have right now, maybe not the V-shaped recovery, right? But maybe the two-step recovery process with a tightening range. Worst case scenario is the daily downtrend establishment and just further weekly consolidation with a ton of space for the bulls. Moving into Meta right now. So Meta also suffering down 4%, guys. Nothing happened with Meta today. I can guarantee you guys, nothing happened. That being said, loss of a daily uptrend attempt and into the daily flush of the levels, right? So daily uptrend at this point, suffice to say, it has been lost. All the short-term moving averages as well have been lost too. But the clearest time frame, as I always said, is the weekly time frame, right? So now we are officially into a little bit of a weekly downtrend right now, and now into monthly consolidation. You can see it best on the monthly. What are we trying to do for the bulls right here? Looking for the monthly higher low for further trend continuation. So I'll be eyeing this area. I've been waiting for this one for a while. And if they come down and pick me up, I will say thank you very much. If we retest 435, 440 regions, looking into this area right here, I will be looking to bid these areas, guys, because I'm looking for the monthly higher lows. And this, guys, is like 5-6 months worth of resistance. So the bulls should have a good time in defending this location right there. So I will be looking to add a little bit of meta positions in the event we start retesting 540 to 530. But as of now, looking quite weak, especially if you're looking on the shorter term daily timeframes. I would not be surprised if they continue and consolidate into there before establishing a local bottom and then regaining the uptrend. Nothing wrong with Meta's fundamentals. The fundamentals are still amazing. Microsoft, same thing. Did anything change with Microsoft overnight? Absolutely not. But unfortunately, one thing did change. That is the loss of the daily uptrend. We know that 433 down to 425 has been very challenging for the bulls all year. They've constantly been getting rejected here, except for this one push in the month of July, constantly getting rejected, right? So at this point in time, guys, have to look a little bit lower. Where are we going to look to? Well, the lower end of the range of support, right? 410 down to roughly, well, the true range is 405 down to about 390, because that is the zone that the bulls have played very good defense all year. The 50 weekly EMA is right there. And usually the bulls do a good job of defending this in the context of an overall bull market. Take a look at Microsoft when we go back through the years, right? Here is 2022. Before the crash, as you can see, it didn't, all 2020 and 2021 did not pull back there, but every single time we pull back into the Microsoft 50 weekly EMA, usually does translate to a decent little buying opportunity. I'm not saying it can't go below like we saw in 2015, but it usually does translate to a decent little buying opportunity in the context of a bull market. So that's where I'm going to be looking to constantly go shopping, guys, right down here. And also the 200 daily moving average is curling up right here as well at about 411. So Microsoft's been very, very, very muted, guys, severely underperforming the S&P 500, but the fundamentals have been improving. So if anything, constant buying opportunity for more long-term shares for Microsoft, or maybe even some call options, some call debit spreads, but give this one some time. It's not known to be the fastest mover in the market, but it is consistent and it is predictable. So if we are building some positions down here, we need to have some patience, guys, because these weekly uptrends can take some time to form. And before you know it, we may have already, wasted, well, not wasted, but may have burned about a month worth of time before we crack through this resistance. So if you are looking for longs on Microsoft, just understand that it's not the fastest stock. It's more consistent, more of a predictable name. My long-term targets for Microsoft at the end of next year are well above 500, between 500 and 550. I think by the end of 2025 is very, very, very fair at that point in time. Moving into Netflix down about 1.59, and we knew that this was going to happen eventually, right? Beautiful daily uptrend into daily consolidation, which was inevitable. I was telling you guys, watch the loss of the hourly time frame, right? Loss of the hourly time frame and the loss of the 12 EMA. You should have a good indication that the bulls are maybe looking a little bit tired and the bears are going to take over for daily consolidation. That's exactly what we're getting right now. First stop is the 12 EMA down here at 800. In the event they give back too much and set up for the daily downtrend, you guys know what's going to happen, right? weekly consolidation at this point in time. Who's in control? The weekly bulls are in full control right now at this point in time. Anything above 750, looking for a weekly higher low for further trend continuation. Nothing wrong with Netflix. Nothing changed overnight with Netflix's business. Still an extremely solid stock. I'm just not adding any long-term shares up here. I'm keeping all my shares. I'm not selling any, but I'm also not looking at this one so much for a swing trade because it has run a lot. We are daily overbought conditions, so not the ideal location for me for a swing trade. Moving on to NVIDIA right now. Well, NVIDIA has earnings next Wednesday, so I do feel the price action could be fairly limited. That being said, guys, daily downtrend is now underway, right? Low, lower high, lower low, no new highs, daily downtrend clear as day, flushing the 12 EMA. So daily consolidation underway right now, which also translates into a little bit of weekly consolidation as well. The weekly higher low is right here, 131. But none of that is going to matter, guys, because NVIDIA has a big expected move for next week. There's a lot of expectations in this stock. We'll tackle that when we get a little bit closer to it, but oh, it's not going to give it to me because we're on the Friday after the close. Let's see if they give me the expected move here. 9.1% for next week at the close. So obviously 9.1%, it's going to completely negate. If let's say we are in here right before earnings, right? 9.1 is right back down here, 130 to 125 support, and 9.1 to the upside from here, of course, is a blast through the 150 level, right? 150, 155. So obviously, you know, we're not going to be able to drive that many levels of price action. The one thing that I do say, though, is in the event NVIDIA gives us another buying opportunity down here, flushing to the 130, 125, I'll be looking to write short puts all day, guys, below 120, 120, 115 with a lot of time on them. Could be a decent location because even if we lose this weekly momentum that we have, right? What are we looking to do? Just looking to set up for maybe a monthly higher low for possible further trend continuation. No red flags on this stock as a whole. I think they should have a very good 2025. The big tech hyperscalers kind of gave it away when they said through their earnings about a month ago at this time. They all said the same thing. They're spending more and more money on AI through Q4 of this year and all through 2025. So NVIDIA at least should have, you know, the profits and the revenue secured for end of this year and also into 2025 as well. So I'm not expecting the stock to really fall off a cliff, but short-term volatility can be anticipated. Moving on to Tesla right now. So Tesla bucking the trend of the market, right? Tesla and Palantir. This is a stock that actually did quite well, even though the market was completely crashing. But it's because the bulls are in full control right now, guys. I was telling you, watch how we react to 310 down to 300. It is the most relevant area of support, right? It was resistance back here in 2022, tapped it once in July of 23. So you wouldn't say it's the most solid level, but it is a big psychological level, that 300, right? We were always looking for a short-term, temporary bottom for the bulls to give them a possible second attempt at establishing or continuing rather the daily uptrend. As of right now, the day's price action was good. They did do a good job in trying to reset the hourly, but we do not have a confirmed hourly uptrend, guys. The bears can just steamroll this into Monday morning and nobody would be surprised. And then we would still be looking for a daily higher low because since we do not have a confirmed hourly uptrend, we cannot say that the official daily bounce is underway. So this one could go either way. If we do drop a little bit lower, 312 down to about 300, could be a very juicy opportunity to write some short puts, 285 down to 260 because the premiums are so juicy on this one. But as of right now, the bulls are playing quite good defense. On the weekly, the same picture applies, right? Beautiful weekly uptrend right now, looking for a possible weekly higher low. So even if we, flush a little bit more or set up the daily downtrend flush, well, just understand what are the long-term bulls doing here. They're trying to set up for the weekly higher lows for possible further trend continuation, which is why I say if we do push down here, watch how they react to 300. We have a lot of space, anything above 240, looking for that weekly higher low. And I will be looking to go shopping for some Tesla, guys. 280 down to 260 for some possible Tesla short puts, looking to play the volatility more than anything. And now lastly, Palantir. So Palantir pivoting from the New York Stock Exchange to the NASDAQ, and that was enough for the stock to go up 11% on the day. In my opinion, that type of catalyst doesn't really warrant a 11% up day, but Palantir bulls looking for any little piece that they can to send this one a lot higher. So congratulations to the bulls again. As of right now, guys, the daily uptrend is clear as day on this stock, right? Still looking for the daily pullback. It has been overbought now, high 80s RSI for a very long time, but the bulls just don't seem to care, guys. Sometimes they just go on these rallies, right? Even though the stock is extremely pricey right now and the RSI is extremely overbought, these things can stay irrational for longer than you may think, right? So congratulations to Palantir bulls. I have nothing bad to say. I am a Palantir shareholder myself, so I can't really be mad at this one for doing this at the current time. It just hasn't provided any re-entry opportunities for anybody looking to buy the dips. So we'll keep a close eye, guys. Once again, always monitor the hourly timeframes, and whether or not it lasts into a daily pullback for more than 1 day. As of right now, they can't get it done, can't flush the most recent daily candles, so it's looking very, very good. Daily higher lows are set, and a new daily leg of uptrend is underway. Just keep an eye if we do pull back somehow under 58 in the short term, loss of the daily uptrend opens the door for daily downtrend and into possibly 1 or 2 weeks of consolidation for Palantir. I mean, that's not a bad thing, right, guys? Everything has to consolidate eventually. Palantir does it all the time, right? All the time they have consolidation phases. So we will continue to monitor for a consolidation phase on Palantir. But as of right now, very, very tough for us to be chasing this stock to the upside, guys. There's only one way to do it, right? And that's probably not by, well, I mean, you can always DCA if you're very bullish, if you have a 5-10 year time horizon, right? You can DCA into the stock. I do believe this is a $100 stock. Maybe not this year, maybe not next year as well, but eventually it will be a $100 stock. That would put them at about a, $200+ billion valuation, which would not be crazy for a company like Palantir at this point, but eventually they will have consolidation and I will be there to buy the dips in consolidation. So that's pretty much all we had for the stock market rundown today, guys. I will be putting out a video over the course of the weekend for some stocks to look at. So more of a stock specific video, some of the plays I'm looking at. Now let's look into the positions. So before we get into the positions that we still remain open in the portfolio, let's go over a few that we closed. So a few of these you guys saw already, right? The wheel trades, Uber 70 puts for the week. That was easy money as a whole, guys. I like Uber at this level. The valuation is fair, big support range. So we played the 70 puts and they ended up very, very nicely in our pockets by the end of the week. BITX as well. Every single week for the most part, I do like to write one or a couple BITX options, just trailing Bitcoin to the upside because there's so much premium, 20% below the market, right? That we can always go shopping for some BITX premiums. So we got the 40 puts, 35 cents all the way expired worthless. So that's another win there. TSMC, you might remember this one as well. We closed it yesterday and pivoted to Google. So TSMC, we had the 185 puts. We wrote them on the Monday session, right? Or I believe it was the Monday session. And the 185 puts, we closed them at the high of the day yesterday when the premium was almost worthless. As you can see right here, wrote them for 85 cents, closed them for 26. And I went shopping for some Google instead because Google was on a dip yesterday and today as well, as a matter of fact. So that's another win on TSMC. Mara as well was one of the wheel trade wins that we had. So Mara had earnings this week, but I played it outside of the context of earnings. 19.5, I was saying that after they had this gorgeous move to the upside, it would be highly unlikely for them to give back the entire move. That's why I wrote the 19.5s, and so far so good. That one expired worthless. And Elf Beauty, you might remember this trade from a few short days ago. I showed it to you all, right? After Elf Beauty had a tremendous rally, as soon as we got a first sign of pullback, I was looking to right a little bit below because we have a breakout, possible retest, and possible rally on Elf. So I was looking to buy the dips here at 119. They did not fill me. They came down close today, but those were, we were able to close those. I mean, I closed them early in the day just because of another contract for next week. I closed them for 7 cents, 85% win on that one. But if you would have held them through the end of the day, you would have ended up worthless as well. So another win on Elf Beauty. In terms of the assignments, guys, you get assigned a few trades. ON Semiconductor. You guys remember how often, I mean, ON, to be honest with you guys, I could have closed this trade many times this week. Many times this week. I could have closed this trade for 50, 60, 70% profits, but I wanted to leave it because I don't mind being assigned. Semiconductors are weak right now, and I want to benefit from that weakness. So we got assigned at 66. We got a $30 credit. So now we have to go shopping for some covered calls. Good thing for us, November, if we look at next week, the covered calls are fairly juicy for ON because of the NVIDIA earnings event, right? I'm getting about $1 on the covered calls, so I'm not too nervous. Very nice area of overall support. So I will keep the ON Semiconductor shares as a whole. I like the company. I like the valuation. And they should be doing a lot better in Q4 and into the end of the year. So I'm actually willing to take assignment, even though I could have closed these many times. And you guys see, I have no problem closing things early, right? Could have closed the ONs, but I said, you know what? Let me take assignment and let me take a little bit of a gamble for some upside recovery rally. SOXL as well. Same thing. Semiconductor play. 27.5 puts, guys. I could have closed these yesterday, guys, for like 8 cents, right? These were 75%, 80% profitable yesterday. Could have closed them yesterday. And I said, you know what? Let me just take assignment down here. Let me start building a position in SOXL with a little bit of shares. And as a whole, guys, SOXL offers such good premium on a weekly basis. I'm not too nervous about having to wheel this option either. 27.5 was the assignment price. We got about 1% on the short puts. You can see for next week, 27.5s, they're offering like what? 4% in ROI for the week on this one for the covered calls. So looking quite good on SOXL. So I will maintain the assignment price right there, looking to build a position at these lows right there. So it may take more than just 1 to 2 weeks to recover, guys, and I am completely fine with that. That is the risk that I'm willing to take, which is why I didn't close any of these, even though I could have closed them easily with some profits. And Enphase, the same thing, guys. Enphase, another one. You guys know this position. I'm in at the 63s. And as a whole, guys, I could have closed these yesterday, even this morning, guys, for a profit. Yesterday, 50, 60% profit. Even this morning, 50, 60% profit. I said, you know what? If they want to come back and assign me, do it. I don't really mind because I'm looking to build a little bit of a swing trade position on Enphase because I think the damage right now is a little bit overdone, right? The Trump narrative and everything like that coming into the last line of defense for support as well. The valuation is very fair right now, under a 1 peg, and their 2025 guidance I did really like after their earnings call. Daily oversold, weekly oversold. So I'm making a play once again on Enphase, and Enphase is also a stock that has a lot of volatility premium inside of it. If you take a look at the options right here, even if I were to, if Enphase just stays flat right now, drops a little bit or rises a little bit, you can see the premium for the 63 calls is quite good. We're getting about 90 cents a dollar. That's over 1%, even though we're $4 away, right? So I like these volatility plays, guys. When I can get them at good levels, sometimes I just don't close them. I just take assignment. If I'm happy with the level, I take assignment and it's a speculative bet, right? A few of the members in the Discord, they closed all 3 of these trades at profits over the last few days. And I also gave that guidance. I said, I'm willing to take assignment, but if you guys want to close them at a profit and free up more buying power, be my guest. It's all your decision at the end of the day. So I'm taking the speculative risk on this one because I like the stocks, I like the levels. So we'll see how those go. Directional trades, MELI, I showed you guys this trade as well. It was after earnings, right? So we bought this one after earnings last Thursday. We were in the low 1800s. We sold it exactly at the area of resistance I was looking for. So nice little 8% profit on that trade. The Square, the covered calls, I showed you this trade as well, right? Very transparent with my losses too. So Square, we were pushing into the covered call territory, right? I had the $88 calls for 43 cents, right? And we closed them for a loss. So I was telling my members, I said, if you guys want, you can maintain these. But I believe, especially because of the strength of Bitcoin right now, I do believe that there is more overhead risk than there is possible downside risk. And that's just the way things were looking at on the Wednesday session when we were breaking out here. So rather than waiting until the end of the week to see whether or not I'd be this much underwater, I said, you know what? I'm not going to take the gamble. I'm up a lot on these leap call contracts right now. I'm very happy with them. And so we just closed them. Well, I closed them at a loss. If we would have kept them, obviously, we would have made a lot of money. But sometimes you need to manage the risk. And since I did not want to get rid of my long-term leap calls, these were a hedge, right? Since I didn't want to get rid of my long-term leap calls just yet, and I'm eyeing a profit target of between 110 and 120, well, I don't want to get rid of them just yet, right? So that's why I closed the covered calls at a loss, very transparent with my losses. So even though it appears like a fairly big loss, we got the exact same premium last week when we played earnings, guys. We got $1.43 in total premium received. And as you can see right here, we closed these for about $1.30 in loss. So it's not as if I lost much. It's, if anything, we just gave back the profits of the earnings covered calls. And the leaps, we just keep them as a whole. We did have a few earnings trades, my 2-time standard deviation move. I didn't play earnings that much this week. There were a lot of different companies, but I just said, you know what? I'm going to save all my buying power. I don't want to take a chance. We made a lot of money over the past few weeks with earnings plays. So I'm going to kind of just play the ones that I want to play and not play too many. So we only did 2 earnings plays. Some of my members did more, and everybody pretty much made money on these 2-time standard deviation moves. Those are the plays that we recapped this week. Let me show you what we still have into next week as well. All right, guys, so taking a look at what we have open for the weeks to come. Well, there's a lot of calls here. You'll notice that I do still have some very bullishly positioned, stocks and call options. So Amazon, we still have the leap call, haven't touched those. We were up about $600 earlier on in the week, and now we are slightly down. I'll maintain those. ASML, this is just a dividend received. Our bull call debit spreads as well are down a lot of money, but we have some time on them. We'll see if semiconductors can manifest a rally into the end of the year. In terms of Berkshire, these call debit spreads are doing fairly well. We are up on them right now. I'm looking for some expansion on Berkshire into the 480, 490 range. We'll see if we can get those, still maintaining those. Elf Beauty, the 112 puts for next week, same logic applies. Looking for a retest of the mid 100, the mid 110s, 1-teens for a retest there. Looking to pick up some Elf shares. We'll see how this one goes. We are slightly underwater on this contract, but a lot of space between us and assignment. Enphase as well. I still have that call, the call option that I showed you guys over the course of the week. This is a bullish play on end phase for the next 6 months. A lot of time left on these. 63 puts, these are assigned into our account right now. These are the Google put options that I pivoted away from TSM to buy these. You can see we are underwater on these right now, but I don't really care, guys. Google is coming down into my desired buying location, so I am putting in one contract there. And even if I get assigned, I will be looking to hold this one for some share appreciation when the markets do come back. I'd rather be assigned Google than a lot of other stocks in the market, so I'm not too worried about this one either. We still have the Google Leap call, of course. I'm not going to get rid of that one much before, possibly in the first few months of next year. I'd like to see Google up, pushing about 180, 190 before even thinking of writing covered calls on that one. Still the Intel Leap calls, the IWM Leap calls as well that I bought just yesterday. IWM, I'll remind you, I'm looking to get at least 2 of these contracts, looking to buy the dip into this zone. So I jumped the gun yesterday thinking that maybe we could get a bounce with retail sales today. And unfortunately, I was not correct. We did get some follow through, but that's why it's a DCA strategy, right? I'm looking to buy the dip on IWM. And since we have a lot of time on these contracts, I'm not too nervous for now. I still believe in the small cap rally. Coca-Cola as well. The Coca-Cola, I started the position on Coca-Cola just a few, about last week at this point in time. And we got this area right there. Unfortunately, not good enough. The market continued dropping. And I did tell my members as well, right? This is just a starter position for Coca-Cola. I will be adding to this position and I will probably maintain the same strike. We have all the way until May, guys. So even though we are down right now, I'm not too nervous about these call options. We're still relatively close. And I do believe in Coca-Cola's ability to recover in the short term. Microsoft, the bull call debit spreads are still here. We are now slightly down on them after being green on them yesterday. A lot of time still left on the Decembers and especially on the Februaries as well. Micron, we have now successfully round-tripped the entire earnings, but we have a lot of time on these leap calls, guys. I'm looking for the semiconductor rally into early 2025, so I will hold those strong. NVOs, these expire today. I was talking about this position at length. This is just a debit call spread gone wrong. I got too stubborn with it, took the loss, and we just move on. Instead, I replaced it with the April 120 calls, and even though we're down on them currently, I still do believe that NVO can have a little bit of a rally, at least over the next 6 months, which is the amount of time we have left on these contracts, right? So they're not too far away. We'll watch these closely. ON Semiconductor, this is the assignment we just talked about. The Oxy, still the $55 calls here for the eventual recovery of the oil sector. Warren Buffett also added to the position over the last quarter, so I'm fairly bullish on this one. The QQQs, this is a short-term call position that I did at the end of the day today well, not the end of the day, but midway through the day when we hit deep hourly oversold. I'm just like, this is a 2-week call, guys. Just looking for a little bit of an hourly recovery on the QQQs. Get a bounce Monday and Tuesday. I'll probably close these for a profit. So not a very large position, but a swing trade nonetheless. SOXL, here is the $25 call option for 6 months worth of time for May 2025. $25 call in the money. Once again, playing on the semiconductor's ability to recovery into the end of the year and early next year. Here is the assignment for the 27.5 puts that I just got as well. The SQs, here are the leap call contracts. As you can see, we are still up very nicely, a little bit less than we were earlier on in the week, but I'll maintain these through about the 110, 120 level, no problem at all. And then there's the TLT hedges, still maintaining the TLT hedges as well. So that's everything for the portfolio, guys. Hopefully you guys appreciated that. If you did, consider dropping a like for the video. Would really appreciate it for the growth of the channel. Consider subscribing to the channel too. We do these recap videos every Monday through Friday after the close. The Friday ones will still be a little bit longer as I give a weekly recap view and also a full portfolio recap view. But moving forward, the Monday to Thursdays, guys, I'll tell you right now, I'm going to keep them between 30 and 40 minutes to get better views from the algorithm. And also to, I know it's a bit long, an hour plus. I know some people like it, but a lot of other people don't like it. And lastly, if you have any questions whatsoever, especially in this type of market, feel free to leave them down below. If you want my opinion on a stock, an options play, anything you want, guys, leave it down below. And I will give you my humble opinion without it being financial advice, of course. And of course, lastly, guys, if you want access to all of these trades, and this is this week's trades, a lot of success, a few assignments that I chose to be assigned on, but all of these could have been closed at a profit very easily as well. And this loss right here, guys, is just, if you weren't in the leaps, this would not have been a loss. And you guys saw the rolling profits on the leaps, right? The rolling profits on these leaps were up like 127%. We're up like 3,000 on 4 contracts, right? So in the event you guys want access to all of these trades, here are all the prior weeks. You'll notice not that many losses as a whole, and the losses are all justified and quite small. So I do a good job of getting the wins juicy and decent, and the small and the losses are relatively small. So if you guys want access to all of these trades, our private market live streams every single morning for about an hour or two, and ask me all your questions all throughout the day in our chat rooms, opinions on your stocks, opinions on your options, always feel free to ask me in those chat rooms, and you get access to, once again, all the other trades, the wheel trades, the longer dated wheel trades, the shares, the call options, the long-term investments and leap calls, and everything in between, all the setups as well. If you guys want to take different trades, well, the link to the Discord is down below, guys. So feel free to check that out. And if not, well, I guess I'll see you guys back on the channel. Have a beautiful weekend. I'll see you this weekend with a couple uploads. Take care. Peace.